welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and all the market strategies that you need to follow for this weekly expiry session of the Nifty now. Remember, we've already been up for last 5 trading sessions on the markets, on the Nifty, and in fact, we've also marked our first closing above 25,000 mark as of yesterday since July 24th of 2025. So that mark has also been achieved on the closing level as well. Now let's look at what is the trading setup from overnight trade on the Wall Street. Well, the Wall Street definitely settled on a mixed note due to continued sell-off in the technology stocks and mixed retail earnings as well. The S&P 500 index fell by about 0.2% and the heavy, especially the tech-heavy index, NASDAQ, that was down by about 0.67% as well. Although it was the Dow Jones Industrial Average that closed with almost flat with a positive bias there. Now, when we look at the Asian markets this morning, well, you will be able to see that they opened on a mixed note again as investors continued to weigh the S&P 500's 4-day losing streak. Last check, we've also seen that most of the indices have been higher. Look at China, about 0.5% up. Mild gains on Hang Seng. You can also look at Kospi, that's up by over 1%. Whereas the Nikkei, that's in fact slightly lower in trade, about 0.6% odd. Again, we are given to understand on the GIFT Nifty that we will continue to move forward on the upward trajectory beyond 25,115 now, about 1/10% higher is what is being indicative of the opening in trading session today as well. Of course, apart from this, a lot of those sectors that had got into momentum over the last 2 or 3 trading sessions led by the GST led reforms announcement, that will continue to keep all of these stocks also in focus. Remember, the Russia-Ukraine talks and signs of improvement in India-China relations are also going to be key factors that we are going to be continually watching about as well. Let me quickly look at some of the stock ideas that you should be watching out for in today's trading session. Apart from the secondary market, even in the primary market segment, you will be able to see a lot of IPOs that continue to tread higher. Look at Shriji Shipping Global, Gem Aromatics, Vikram Solar, Patel Retail. These will all close for public subscription today. So in case you haven't really looked at them, today is the last day for subscribing as a retail investor into all of these IPOs as well. Mangal Electrical Industries IPO will actually enter in second day of subscription levels as well. So that's also going to be in focus. Let's look at some of the stocks from the cement basket. Ultratech Cement is going to be in focus. It's set to sell 20.1 million shares, that's 6.5% stake in India Cements through an offer for sale today to tomorrow. The floor price has already been fixed at 368 rupees per share. The offer for sale will open for non-retail investors on August 21 and for retail investors on August 22nd. So keep that stock in focus again in case you are a shareholder there. Bharti Hexacom will also be in focus from the telecom company. The company has actually received approval from the majority shareholders at its 30th annual general meeting to sell mobile towers to its sister concern for 1134 odd crore rupees there. So keep that stock in focus as well. Let me also look at some of the other stocks. So from the healthcare pack, keep an eye out on Fortis Healthcare. In a bid to expand the footprint in Uttar Pradesh, hospital chain Fortis Healthcare has actually signed operations and management agreement with Ikana Group to actually run a 550-bed greenfield hospital in Lucknow. So keep that stock in focus. Again, from the pharma space, Oro Pharma will also be in focus. We'd marked out this news flow towards the end of the session in yesterday's trade, but this is going to be for the second day in a row that the stock is going to be in focus. The company has actually emerged as the leading contender to buy Prague-based drug maker Zentiva from private equity firm Advent International in a deal estimated to be somewhere around $5 to $5.5 billion. Remember, this is going to be the largest ever deal that Indian pharmaceutical company could have actually taken in either a domestic or an international space as well. So keep that in focus. Oro Pharma will be in focus because of that. Real estate player, we'll also look at Godrej Properties coming into focus as well. The Mumbai-based real estate developer has actually entered into an agreement to acquire a 7% equity stake in Godrej Skyline Developers from an existing shareholder. Now, the company has also emerged as the highest bidder for 7.825-acre land parcel in Kutakapalli, that's in Hyderabad, with a total combined bid value of 547 odd crore rupees, and that's according to the bid status information that we've actually got to know as well. So that's going to be in focus. Apart from this, there are so many brokerage houses reports that you can also continue to keep an eye out on. Let's look at Indigo, for instance. That's going to be in focus here. Kotak Institutional Equities has come out with a report. They have downgraded Indigo, but at the same time, they've downgraded it to add rating, and the target price continues to be at 68.50 odd levels, higher than the current market price. Now, these are reflective of Indigo managing capacities in loss-making second quarter, and in doing so, potentially taking out memory of low yields from consumers' minds. Now, same sets stage for an uptick in yields in third quarter. That's going to be the festive season, is what the broad points are. Now, on Reliance Industries, remember we've been discussing Reliance Industries with all of you and bringing out various points and factors that are important to track for the largest company listed by market cap, Reliance Industries. Over the last couple of sessions, the stock has been buoyant in the last 1 week, which is in the last 3 days alone. We have seen an uptick of almost 3% on the stock. Why is it in focus? Now, here JP Morgan has come out with an overweight rating and a target price of 1695 coming in for Reliance Industries. What do they say? They say Reliance Industries' relative valuations are actually appearing reasonable, and that's despite any year-to-date outperformance that we have seen. Implied holding company discount is available on Jio and retail. That's measured. That's also something that they are looking at. And these stocks have also done well in the last couple of months too. They're also talking about OTC business, especially the margins on the oil to chemicals business, the potential tariff increases, improved retail growth. That also can actually help going forward from here. Let's also talk about some of the agri-related stocks there. HSBC has come out with a report, and here HSBC has talked about pesticide prices seeing a reversal and increasing, while product inventories are moderating for key herbicides. China's policy measures to address some of the outdated capacities and disorderly competition is a positive, but concrete steps are needed still. So they have retained a buy on UPL with a target price of 775. They've also kept an eye on PI Industries with a target price of 3500. On Bear Crop, they have a target price of 5500, although they have reduced rating on Rallis India, and here the target price is 250. On Tata Chemicals, they have a target price of 780 odd level. So that's also going to be important. Let's look at the markets ticking now. The first tick on the Nifty is being seen in the pre-open trade. It's a volatile start, above 25,000 for sure, just about 22 points higher in trade, 0.08% of a move on the higher side. Let's see whether this continues to be holding on to this level as well as improving from this level as well. So we'll continue to hold on to that level. So let's quickly look at some of the stocks from these brokerage houses views as well as the news flows that are coming in. Let's look at Reliance Industries and see how the largest cap stock is actually moving in trade today, to see how the sentiment is going to be shaping up from here on as well. Let's also pull up some of the stocks from the IT pack. Remember, it was IT stocks that actually pulled up the momentum yesterday. Remember, we had opened negative, but slowly and gradually it was the IT stocks that threw their weight behind the bulls and pulled the markets higher above 25,000 mark. So let's look at even the IT stocks as well. We'll just give it some moments so that the prices are getting reflective on your screens as well. But let me also just introduce to you our guest who will be joining in. We have with us Gaurav Sharma, who will be joining in pretty shortly to share with us his views on the markets as well. But remember, apart from that, there's one key factor that we are going to be definitely doing a deeper discussion on today with both our guests who will be joining in the morning edition, and that's going to be on the large insurance space as well. You all know how in the last couple of sessions, in the last couple of days, we have been consistently talking about how the key trigger for the market reversal has been the bullish announcement by Prime Minister Narendra Modi on the Independence Day speech, and that is with regards to the GST rationalization. GOM meetings are on. They were on yesterday. As far as the health and insurance basket is concerned, what we are given to understand is that the recommendation from GOM is going to be on having no GST applicable on either health insurance or on life insurance as well. So that's the key factor that's emerged. Remember, initially, there was an expectation that the GST rates could be probably what the government had proposed to GOM was that they should be keeping this to around 5% or nil. So there was no clarity. But yesterday, we have seen a lot of group of ministers who've been a part of this entire discussion talk about how GOM is likely to propose to the GST Council to have an exemption in place for both health as well as life insurance, and that's going to be keeping the insurance stocks clearly in focus today as well. So let's welcome Gaurav Sharma has now joined in to share with us his views on the markets. Gaurav, warm welcome. Good morning to you, and good to have you with us right in the morning trade. Help us understand with your fresh view on the markets first. How are you looking at this improvement in the sentiment? We are back above 25,150 odd mark in the pre-open trade today. So it's also moving in higher from last 2 or 3 odd trading sessions of the move that we've built up on the positive end. How do you see this fresh move?
Yeah, hi Sakshi, good morning. So, rightly said that Nifty is trading over 20,000 levels. We were long waiting for that, and sustenance above this level opens the gate for the further extension to this up move towards 25 200 levels and beyond. We are positive on the markets. We have maintained a buy on dips kind of a strategy, and Nifty held up the supports and bounced back completely. The only concern was that Bank Nifty was underperforming and having a toll on the broader market. Uh, in yesterday's session, some buying was seen in the larger private sector banks, namely HDFC and ICICI Bank, that actually eased up the entire sentiments, and positivity was seen thereafter and led Nifty towards close to the highest point of the day. We are expecting a gap up opening here, and the momentum is likely to last in the day's trade as well. Having said that, if there is any kind of a dip, we will certainly be eyeing at buying the index on dips.
Okay, got that. I think the big discussion point clearly has to be, Gaurav, the GST, meeting that is currently on, GOM meeting, in fact, on some of those GST rationalization meetings that will also start at around 10:30 in the morning today also. They were on in the last evening straight on, especially on insurance front, and that's what I was highlighting before you joined in. How are you looking at this clear insurance space in case there is a full exemption from GST on both health and life? This has been a long standing demand, and more so the government is now paying heed that insurance now is being seen as a necessity, and therefore we are still an underinsured country, and this step could actually lead more and more people to look at both health and life insurance as affordable products, and maybe look at it as a fresh perspective. How would you look at some of the players within the life and health insurance basket to react to such news in case they get the final stamping from GST Council next month?
Sakshi, we as a house were of the opinion, and we are expecting that the finance minister in the union budget will raise this issue, and we could see some kind of a relaxation. Uh, but that didn't happen. Therefore, we were expecting it. Now, again, we are having higher hopes that it will be slashed, because now having a health policy, a life policy is a necessity. COVID has proved that life is too uncertain and the medical bills can rise up to any extent. Therefore, this has become a very much of a necessary for the general Indian public or anyone. Government is having a keen emphasis on this. The senior citizen health cards clearly indicates that government is focusing on this area to make the medical facilities affordable and approachable to larger public. Therefore, expecting a slash or a complete reduction or exemption from the GST would not be something expecting too much. We are bullish on the insurance pack on the whole. HDFC Life, SBI Life, among the life insurance space, the largest two players, we are bullish on both of them. Apart from that, when we specifically talk about health insurance, Star Health is one company one can look at. We are expecting this company to perform well going forward. So these are the three companies that one can consider or should have in a portfolio.
Okay, fair point. So those are the key stock ideas that could be important and could be kept on the radar as far as the insurance space is concerned. Let's look at the markets yet again. 95 points higher. They're close to settle down in the pre-open trade as far as the action is concerned, and 24,140 or 25,145. That's the level that it's getting settled at. Let's also look at some of the other key aspects. GST is also being closely looked at as a trigger for some of the other sectors, Gaurav. So autos, for instance, cement, for instance, that is hopeful that the GST rate could be rationalized from 28% down to 18%. How would you look at these two? Autos have already been reflecting a smart move upside over the last couple of sessions. So how would you look at that? And cement basket also, if you could throw a light on both and tell us what's your choice of stocks there.
Yes, of course. I think Sakshi, you would remember prior to the GST Council outcome, we were still bullish on the cement pack. We continue to uphold the same. We are excited that this is a kind of a icing on the cake, and it will boost the cement sector. We are expecting a slash of 30 to 40 rupee per bag if the GST prices are slashed as expected. Therefore, it will provide a long-lasting and a cascading impact completely on the infra space, because cement is the starting point and they go to a larger where they have a positive impact on the real estate sector. They have a positive impact on companies like L&T that are indulged in bridges and dams. So overall, this is a very positive move, we think, by the Indian government. Companies like Ultratech Cement, companies like Dalmia Bharat, JK Cement, we continue to be remain bullish on that. We are having a coverage on Ultratech Cement. Here is a disclaimer coming in. We have recommended the same to our clients. Now coming on to the auto stock. Yes, a 10% slash of GST is a good boost for the auto companies. If I simply look at a mean average automobile in India is now somewhere priced at 10 lakh odd rupees. So if the GST rates are slashed by 10 odd percentage points, I think this will provide a good boost to the public. Now, with the repo rate coming down by 1%, slashed interest rate is a positive for the automobile companies. Again, we are expecting that early next year, eighth pay commission will be enforced. That will increase the income for the government sector employees. And when we talk about the smaller ticket size, that is the 1.2 liter engine and below that, this is some area where the salaried staff, the government employees, emphasis more on this segment, and this segment and the maximum benefited. Therefore, we are expecting Maruti to be one among the largest beneficial of this GST slash, because they are the leader in the sub 1.2 segment market. Now, apart from this, the government is emphasizing too much on the agricultural sector as well. Therefore, we are bullish on Mahindra and Mahindra. The sales figures are positive as far as Mahindra and Mahindra passenger vehicles, tractor sales are concerned, and their farm equipment business is also doing well. Now, with a clear government focus coming in with the reduced GST figures, I think again Mahindra and Mahindra will gain momentum. So these are the two stocks that one can consider from the four-wheeler space. As far as a two-wheeler space is concerned, we remain bullish on Hero MotoCorp.
Okay, fair point. So that's the auto space. You did also mark out cement space for us, but Ultratech Cement and India Cement both are in focus in today's trading session because of news flow as well. So we have, Ultratech Cement, which has given an approval for sale of 6.5% stake in India Cements. Now the Aditya Birla owned firm will now sell up to 2.01 crore equity shares in India Cements by way of offer for sale here, and that's what is keeping the stock also in focus. Any fresh triggers that one should be really looking at from what emerges from this offer for sale also for retail investors, Ultratech Cement and India Cement? How would you look at both then?
It would have a very material immediate impact on Ultratech Cement. The floor price is 368. India Cements settled yesterday at 370. Therefore, no material impact is likely to be seen in India Cements also. I remain bullish on Ultratech. Now it is Ultra will own a larger part of India Cements, therefore it will benefit from both of it.
Okay, got that. So let me just quickly now look at all the stocks and the sectors that have settled in the pre-open trade to give you an idea of what exactly could the market opening be like. So Nifty 91 points higher at 25,142. All the sectors barring just slight losses on pharma and media stocks could also be opening higher. IT could actually be seeing second day of a positive momentum again in trade today. That's again looking to be holding all the reins again. About 0.6% higher in the pre-open trade is where the IT index is also settled. On the stocks front, on the Nifty, you have Coal India, Bajaj Finserv. Remember, there's a positive report on Bajaj Finserv as well on the brokerage houses front. Tata Consultancy Services, Axis Bank and Eicher Motors, a mix of all those sectoral stocks that could be also opening higher in trade. On the downside, however, we could see some dip on Cipla, on JSW Steel, Tata Consumer Products, Eternal. That's what is being given to help us understand as well. So we'll come back to the markets once they finally open. This is just a broad understanding of how they've settled in the pre-open trade. But Gaurav, let's also ask you about some of the other aspects as well. We have discussed a lot of sectors which will be impacted from the GST rate rationalization, and how should one really look at the opportunities there. I also wanted to bring in the other aspect, and that is with China cozying up to India and also taking decisions which are positive for Indian sectors as well. Say for instance, in the last couple of days, we have seen China lifting the export sanctions on both the fertilizers as well as rare earth magnets and metals. How are you looking at those as key triggers, at least in the short to medium term?
I think the ongoing, this is the result of the brisk summit that was held recently, and this has improved the ties between India and China, and I think US has also played a very important role in it, stressing both the countries to the limits, and actually this has helped. I was reading an article that China was having a clear objection that India might sell the rare earth that are supplied from China to America, and now there has been an agreement that it won't be sold out to America. Therefore, Chinese are having no problems to it, and the shipment is likely to be done really soon, which will boost India's demands. And rare earth metals are something that was largely required by most of the companies.
Okay. Let me also just ask you then on some of the stocks that have been actually reacting pretty positively on these lifting of restrictions. Ola Electric, I wanted to bring that up for you. A pure play EV story, something that has been a big laggard as well, been seen as a wealth destroyer since the IPO because the stock had gone up to 100 odd levels, given a lot of promise to initial investors, but thereon there were so many problems that cropped up and the stock continued to fall even in the deeper bellows. Now I want to understand, in the last two odd trading sessions alone, we have seen the stock jump by over 25-26%. Yesterday itself there was an 18-19% kind of a move. Day before again there was a high double digit kind of a move on Ola Electric, and the stock is back above 53 odd levels, nearing 54. Even again in trade today, there's an uptick that could be expected yet again. How would you look at that?
Prior to this up move and to the news that came in from China, even I was very much negative on Ola, not at all interested in buying it. But this brings a whole lot of positivity to the to this particular EV segment, specifically a larger expense for a company like Ola Electric in their vehicle comes from the battery part. And now, when the availability of rare earth metals, larger availability of rare earth metal, it is expected that the prices will also come down and their production will also improve. That is the real reason why such a phenomenal volume-backed buying was witnessed in previous two trading sessions. The stock has almost rallied from 40 to close to 55 odd levels by yesterday itself. I don't know the current prices today, but that's a phenomenal move. So this will actually boost it. So we may not see a further immediate rise in it, but yes, now this particular thing is into play, and we should consider it from a little longer perspective, at least 1 to 2 quarters. I think we could see some kind of a further extension to this current move, and a price level close to 58 is pretty much possible.
Absolutely. The markets have started to take on a higher note. You can see 25,090 odd levels, 40 points higher in trade for the markets. Look at the Nifty now and the stocks within. Bajaj Finserv is the top mover, 1.5% higher. There's a positive report on it and an initiation that has really led to some move on the positive side. When we look at among the sectors, well, all the sectors, barring just FMCG and pharma, are into the negative zone. IT is, in fact, now starting on the back foot again, but it's the banking space that's taking the lead, something that was a laggard yesterday. Nifty Bank up by 2/10%, financial services 3/10% higher, PSU banks are also up. You can see even the defense names, capital markets names that are up in trade. Autos are higher by about 2/10% as well. Energy basket, oil and gas is also taking higher by about half odd percent. Even the real estate stocks are up by about 0.4% in trade. This is despite the fact that India VIX, remember it's the weekly expiry session, so India VIX is important to be tracked, 0.8% higher at 11.88 odd levels right now. But FMCG, pharma, those are the key stocks that are in sectors that are starting on the back foot. And now you also see IT coming in to some profit booking fold as well. We are also seeing some block deals take place. Clean Science Technologies is seeing 31.5 lakh shares that have seen an exchanging of the hands. There is a large trade worth about 345 odd crore rupees. The stock is down by about 6.5% on the back of this news flow as well. So 31.5 lakh shares have exchanged hands worth about 345 rupees odd coming in. And this is 33.2 lakh shares again that are seeing some trades take place right there. We'll have to wait and find out at what level this has happened. So the large trade value has now increased to 360 odd crore rupees. Two deals back to back have taken place on Clean Science Technologies. Let's look at some of the other stocks that are buzzing in trade today. Well, you have a lot of stocks that are in news flow. So Railtel from the railways basket is up by about 2.7%. It's bagged orders worth about 50 crores. So that's also on the higher zone. We have some stocks like Godrej Properties that's acquired a big land, a 0.8% of an uptick on that one today. From the railway space, there are some other stocks also, in fact, that are taking higher. Let's look at even Jupiter Wagons for that matter. It's got a letter of intent for an order worth 215 odd crore rupees. Look at the smart jump there, 6.7% higher. We also have some more stocks in news that are reacting positively. V-Guard Industries is in focus. The promoter here has sold 82.5 lakh shares via block deal. So about 1% higher in trade. That's also in focus right now. And Godrej Properties I already marked out. It's the H1 bidder for 7.8 acre land in Hyderabad. And that's really leading to smart move on the stock as well. Bajaj Finserv, we already marked out for you, 1.5% higher. Supreme Industries is another one that's also on the move in the positive direction right now. Let me also see some of the other stocks in F&O. So apart from Supreme, there's Jindal Stainless that's higher in trade. You also have RVNL. Railway stocks clearly coming back into focus. Let's come back to Gaurav. Gaurav, how are you looking at the railway stocks which have so far been, out of the vicinity? But anything positive now that you would want to see as a trigger to buy afresh into the space?
Yes, Sakshi, I just heard you talking about Jupiter Wagon rising
Yeah.
some 8 odd percent in the trade today. So it is the today's move is the outcome of the recent order that this company has bagged from the Indian Railways to supply Vande Bharat train coaches. So that is the real outcome. Overall, we have been maintaining a bullish view on the railway pack on the whole, but with a longer term prospect, not a shorter term space. We need to understand that railway is also one industry wherein from the order placement to order execution and to the final delivery and then receiving the payments, this particular process takes at least 1 to 1.5 years time frame. Therefore, we cannot play in short for this kind of a play. Considering that there are three large segments that railway needs to be divided into. First, the railway infrastructure means the railway lines, the railway engineering, the IT related infrastructures. Companies like RVNL and ABB play a role in it. Then is the railway coaches business, that is Jupiter Wagons, coaches and bogies kind of a business. And the third is the ticketing business, something like an IRCTC sort. So these are a combination of a thing. So if you want to play on the railway business, I think the amount of money needs to be divided among these three spaces.
Okay, got that. So I hope this has also given you some understanding as to how to go about it. Let me also pull up some other stocks that have been laggards and are coming back into focus. Irida, for instance, is up by nearly 2 odd percent today after a long haul again. That's also coming back into focus. Life insurance names are definitely in focus. Among the top movers are SBI Life, HDFC Life, both 1.5% higher in trade. Even Reliance Industries is moving up, now about 0.9% up. Trent is also higher in the morning trade. You can actually see now the real estate players jumping up higher. Even the index is now up by nearly 0.7, 0.8% odd. It's the top moving sector, and definitely Godrej Properties has led to that move. Let's discuss real estate with you. Gaurav, how are you looking at the real estate story developing, especially with the likes of Godrej Properties that is getting big on acquisitions? If we look at the last 2 months of announcements, the company has consistently been announcing newer orders, newer projects, and acquisition of lands as well. This one is also going to be a positive one. The stock is also moved up about 1.5% there. We also have some other stocks that are moving in tandem. Anant Raj, Prestige, Lodha, DLF, Oberoi, all of them are up and about. So real estate again, which has been so far a slew mover in this year so far, how will you look at that?
Firstly, we are optimistic on the Indian real estate space. We have been maintaining this view from quite some time, although on the price fronts, the companies have not impressed that much, but we still uphold our view. We are of the opinion that the slashed interest rates, a 1% cut, will have a reflection on a larger play in the later half of the year and going forward in the next year as well. Considering the ongoing inflation, which is into the contained trajectory as far as the RBI figures are concerned, there are hopes that further cuts can also be seen in the later half. Again, that will provide a boost to the real estate sector, because a larger chunk of the real estate business comes from the loan related. The the consumers of the home buyers are actually taking loans and then hopping onto it. Again, the rise in the pay income due to the 8 pay commission will also provide a needed boost to this particular sector. So, having said that, we are on a bullish front as far as real estate is concerned, but we are maintaining a long-term view on it. We are not suggesting our clients to trade on to the stocks like DLF, stocks like Sobha, stocks like Lodha are our favorite picks.
Okay, fair point. Got that in to note as well. Let me also look at some of the other stocks within the broadest index, the Nifty 500 basket, to see if there is any strong move there, and some of the stocks that we could mark out for all our viewers. Kitex Garments is higher by about 5%. SML Isuzu is now up by 5%. 4,400 kind of levels being seen on this one. You also have Happiest Mind Technologies, Surana Solar as another one that's also on the move on the higher side. Jupiter Wagons is up by about 8%. We already marked out that for our viewers. Some of these stocks are actually inching higher. Let's also ask you on SML Isuzu, how would you look at this one? The stock has been an outperformer clearly in the last couple of months. After having seen M&M's acquisition come through, the stock has been consistently on an upward trajectory. How would you really look at SML Isuzu at 4,400?
I think this is quite a surprising figure. A company which, from an Indian perspective, was nowhere into discussions earlier, but just the news came in that M&M is acquiring the company. So a share that was quoting at 1,000 rupees just couple of months back, now we are talking at 4,400. What more to say about it? I still don't find comfort in buying it, something just that has four-folded. So, I mean, the investor can just go on holding the stock, keeping a trailing stop. I am in no position to actually assess how far it can go, because even at 3,000 levels, I was seeing that it has risen too much and it has proven me wrong. It is at 4,400 now. So, I am keeping my hands out of it. But, the thing is going on, so just the investors can ride along with it.
Right along with it, okay, but still no comfort at these levels for a fresh buy. But in case you've been holding on, you can hold on. You've already seen in the last 3 months the stock has jumped up by 153%. That's the kind of rally that you've seen in just flat 3 months, into the stock as well. So that's where the strong move has actually come in, and 290% move in the last 6 months as well. So a 3 times move is what we've already seen in just the first 6 months of this year. In fact, that's where the maximum move has actually come in the last 3 months, especially. Let me also just pull up some of the other stocks. Let's talk about Indigo for that matter. Here, Kotak has downgraded Indigo, and the Interglobe Aviation, that's the parent company of Indigo. And although they do believe that the company is continuing to go on its growth path, there are some things that have pointed out negatively for the firm. Even though they have a higher target price of 6,850 on the counter, Kotak has said that the recent data points and reflects the impact of Indigo's capacity cuts, which appear to be happening at slightly faster pace than the key peers as well. So even though the brokerage said they are not seeing this as a sign of weakening demand, at least for now, but this is definitely been seen as a key watch. How would you look at Indigo? This has been a promising stock for this year so far. If we look at the last year to date kind of a trajectory on the stock, you will actually see a 33-34% of a rally that has already come in. What next? We are at the beginning of this festive season. That's where a lot of positive triggers emerge for the travel, tourism industry, hospitality industry. What would you say at these levels for Indigo?
Firstly, Indigo is the only airliner in India which runs into profits. Currently, it is trading at a price to earning of 35. That is not at all too expensive for this kind of a company posting these kind of figures. What we have seen in the earlier this calendar year is was the outcome of the religious tourism that was seen. The Kumbh Mela attracted a lot of tourists to and fro Uttar Pradesh region. Uh, this kind of a momentum will not continue going forward, but the later half of the year is generally seen positive for the tourism, positive for the aviation companies, largely because uh, a lot of people fly in and out of India around that time. Christmas season too attracts, Diwali too attracts. So festivities attracts a lot of transportation, a lot of logistics moving here and there. We remain bullish on this stock again. Any kind of a dip coming in near term, we will be eyeing it at as a fresh buying opportunity. I'll be looking at a level somewhere close to 5,700 will provide me a lot of comfort. We will start buying around that level. We will suggest our clients to look at the stock and buy on dips and keeping a longer term view on this particular stock.
Okay, Gaurav, look at the Nifty chart. I will take a view on that. Meanwhile, let me welcome Abhishek Basumale, co-founder and fund manager at Sri Rama PMS, now joining in on the program with us. Warm welcome. Good morning to you, Abhishek ji, and good to have you with us. Well, we are back above the 25,000 mark. We were discussing last week with you as to whether we are comfortable to say that a bottom has been formed and we could be inching higher. So far this week has been pointing out to higher highs, and that's also led by a lot of positive domestic news flows that have come in with respect to GST rationalization, etc. How are you looking at this fresh wave of buying emerging on the markets? Will it continue to sustain?
Well, good morning to you and all your viewers. I think, see, the buying has come because the market was pretty much oversold. Everybody was, you know, in a pretty, everybody was pessimistic. Now, if you look at what is actually changed within the last couple of weeks, you will realize that nothing really has changed on the ground, right? The only fundamental factor that has changed is the S&P upgrade that has happened. GST is still, I mean, it's just conjecture right now. There are no, uh, actual data points which has come out. There's nothing which has happened on the ground. Secondly, I think we are yet to see if the 25% additional tariff is going to happen or not, and we are actually inching very close to the timeline for that. So I would expect that there is going to be another bout of volatility as and when we get closer to the, I think, August 25th or 27th, whenever that date is, right? So again, uh, we could be again in that zone of turmoil and uncertainty in the next 1 week.
Okay, got that. Let me quickly just take one view with Gaurav as far as the markets are concerned, and we'll come back to this broader discussion with you again. Gaurav, first 15 minutes of a candle is formed. We've started off on a volatile note, but we're still holding on above 25,070, 25,080 odd mark. What exactly would your thought process be today, being the weekly expiry? What should be the strategy then?
See, Nifty is just coming down after its opening to fill the gap, what I can see currently. 25,050 is the level where the gap ends. So I think that level is likely to be tested. Till the point market is holding above 25,000 odd levels, we are clearly bullish from an intraday perspective, from a positional perspective. Even a 100-point dips from these levels will get Nifty to an attractive level. And we again maintain 25,200 to be our first immediate target, which is still even the gap up levels, even the opening levels, the Nifty went up to 25,144. So still a lot of room is there. So any dip, I think we are more comfortable at it.
Okay. Abhishek ji, you were talking about the GST, rationalization news flow. That has been largely the key reason why the markets have been pretty buoyant over the last 3, 4 odd trading sessions. How would you really look at the impact on some of the sectors there? There's already a broad understanding of the proposals that have gone in from the government to the GOM. The GOM has been meeting since yesterday. There were some news flows on insurance aspect yesterday that are giving us an indication that the GOM is likely to propose to the GST Council that there could be a complete exemption on individual insurance, both health and life, from GST, which means that these two insurance policies that were so far being taxed at 18% rate on GST might be actually taxed at nil or zero. How would you look at this, in case this actually comes in into the final print of GST Council? Is this a big positive for insurance companies? And I think, the key point will also be to understand whether the government will be able to ensure that some of the benefits definitely come down to the end consumer as well, because the entire idea is to make insurance products affordable for the consumers at large, and premium costs have only risen over the last couple of years. So reduction in GST on the one hand, how will it impact at the end point?
So, very interesting point. Now, if you look at what the insurance industry is saying, is that they don't want a 0% GST, right? And their rationale is that the moment you take 0% GST, they do not get any input tax credit. So, in effect, what might happen is that the cost of the insurance companies will go up because they don't get any input credit, right? So it remains to be seen. The industry is actually asking for, 5% or some kind of small taxation where they can get the benefit of input tax credit. But on the broader point of GST rationalization, I think it's a very, very welcome step. I think it's very needed. We have been in this GST regime for slightly less than a decade, and GST numbers have more or less now uh, got to a stage where the government is sanguine about the amount of money coming in. So it's probably time that we rationalize the number of slabs, and also reduce the overall burden of taxes on people, because mind you, GST is unlike income tax. uh, GST has to be paid by everyone irrespective of income, right? It's an expenditure tax. I mean, obviously it has its merits in a country like India, where raising income tax is always going to be, politically challenging. But if you are able to reduce GST, then you definitely give some boost to consumption.
Okay, got that. So that's the overall understanding of as to how the impact will be felt across the players, who are into the business of insurance, and what kind of an impact can the end consumer also impact. Of course, we will wait for the clarity to come in. But Abhishek ji, any other sector that you believe is likely to be a key beneficiary of the GST rationalization?
I think the entire consumption, sectors, whether right from groceries to pretty much everything. If we see a rationalization, see right now the discussion is about the lower, slabs, right? The 12% and the 28%. Now, in those slabs, you have roughly about 11% of GST coming in, which is not much. So if the government really has to make a dent, it has to reduce or bring some from the 18% slab, which is where probably 60-65% of the GST comes from, down to the lower level, right? So if that happens, then again, the devil is always going to be in the details.
Yeah.
But there is definitely going to be a significant push in consumption sectors. And I think the government intention is also that they want consumption to boom, because then it also has a sort of trickle down effect on the overall economy.
Okay, so Gaurav, what's your sense on the consumption-oriented themes like FMCG, consumer durables, for instance? These spaces have again been, laggards in the markets. They haven't really given any sorts of returns this year so far. Many have also been dragging for many, many months, quarters. No enthusiasm in the earnings as well. We're again at the brink of the festive season with this GST rationalization coming through. Do you think it could be a good time to look at some FMCG stocks and consumer durable stocks now?
Well, of course, Sakshi, what we have seen is the FMCG has not performed in the past 6 to 8 years. Some have not performed in the year or so. But what we are seeing of late is stocks like Hindustan Lever has started gaining in momentum. The past couple of sessions, we have seen the stock rallying from a level close to 2400 to 2600 plus currently. We expect this upside momentum to continue going forward as well. And in the next couple of months, a level close to 2800 to 3000 can also be seen. So I think a large cap stock like Hindustan Lever at these levels is pretty much attractive. Apart from that, white goods companies like Blue Star is available at very attractive levels. We are pretty much optimistic that this particular up move and the GST rationalization will provide a boost to this industry. On the technical charts, also the stock is looking pretty attractive. A complete cup and handle formation is clearly visible. Therefore, we expect a level close to 22 50 in this stock coming in the next couple of months. Apart from this, stocks like Hevels and Polycab are also available at attractive levels. Hevels were having a toll just because the summer season were not that extensive and the monsoon season came in early and good monsoon were seen, leading to less sales of air conditioning. The Lloyd brand is were having a toll. Now, when the GST cut would be seen, it will be a clear advantage for Hevels. Therefore, a stock which is laying low from quite some time should gain momentum, and it is available at a very attractive price point now. 1380, 1350 are important supports for that stock. Currently, the stock is trading close to 1550 levels. I think from anyone who wants to take a position of 6 months and more, Havels is at a very attractive levels, and the price point close to 1900 to 2100 can be expected in this time frame.
Fair point. All right, Gaurav, we'll leave you at that note. Thank you so much for being with us in the morning edition to share with us all your views on the markets and various pockets that we've discussed. Meanwhile, viewers, we'll continue our
Thank you.
conversation with Mr. Basu Malik there. Mr. Basu Malik, apart from the sectors that you marked out, consumption-oriented sectors, FMCG, consumer durables, what other sectors could be in focus because of these GST rationalizations? Do you think even autos is something that you're looking at? Are you also looking at maybe travel, hospitality? There could be some rationalization there also that's expected. These forms of consumption, are they going to be looking attractive?
The auto and auto ancillaries obviously probably is expected to be the biggest beneficiary. So there's definitely, and especially in the say the two wheelers and the small car segments, there could be very significant benefits that a consumer can get if the GST is reduced. So definitely auto ancillaries is a very interesting industry to look at when the final GST rates come through.
Okay, got that. So that's the auto ancillary basket. Let me just mark out for all our viewers what's moving in the Nifty 500 basket. Some strong stocks there. New India Assurance, meanwhile, from the insurance basket is up by about 9%. Look at a GMDC, that's also up by 5.5%, 6%. Happiest Minds is up by 6%. Commercial engineering is also up by about 11.5% higher in trade. Swiggy is up today. Smart moves being seen about 4.5% higher on Swiggy as well. Look at even Anil Ambani stocks, Reliance Power, another day when we are seeing smart move of 4.5% higher. India Cements, there's a trigger that we already discussed earlier on Ultratech Cement and India Cements. There's also Prestige, PVR, all of these stocks that are also hovering higher in trade. Any new stocks at 52-week high? Yes, there are. India Cements, Asahi India Glass, Godfrey Phillips, which has been a consistent mover, is also hovering higher on a 52-week high level as well. Which are the hourly gainers that we see in the first half an hour of trade? Clean Science is in focus. Remember, there's been a big block deal today, so keep that in mind. GMDC is in focus, 3.8% higher latent view. PG Electroplast is also improving. I think this is one stock that we can discuss. Abhishek ji, PG Electroplast, we had seen that over the last couple of weeks there was a substantial cut on prices on PG Electroplast since the company came out with reduced guidance on both revenues and profits as well. But slowly and gradually, the company is finding its feet again. One of the key triggers also could have been, China easing out on the exports of rare earth minerals, something that impacts all the EMS related players, EVs related players as well. Since that time, we've been seeing some uptick come through. What's your sense on the entire EMS basket, the likes of PG Electroplast, Amber, Dixon, Keynes right now?
Very positive on all of them. I think, personally, I think manufacturing is one of the key themes, not only for India, but I think it's something that the government also is focusing on.
Yes.
And for manufacturing to work, I mean, there are different industries or different aspects to manufacturing, but the EMS players are a major component of the manufacturing play, and they are slightly different from the traditional capital goods and engineering companies. These guys or these players are more replicas of the Chinese behemoths. So they are very large volume, low margin players, and I think all of them they have a decadal kind of opportunity to scale up, because the scale is what differentiates them from the others. So I think all of these players, whether it is PGL or Amber or Keynes or Sirma or all of these players in this space, they are in different pockets of manufacturing. So, for example, PG is more into ACs, refrigerators, and they are now getting into other stuff. So the price fall, etc., that happened was primarily because uh, of the uh, problem in the AC segment, right? And uh, because the fact that we have had early and persistent monsoons across the country, uh, the summer has not been that scorching, and consequently AC sales have suffered. But if I look at it from a slightly longer time perspective, couple of years, 3 years, 5 years, you will find that ACs, refrigerators, washing machines, these, the penetration of these in our households is going to continuously go up. And PG is one of the dominant players in that market. So, uh, you know, there will be once in a while, short-term knee-jerk reactions to short-term news. But overall, I think this is a theme which is going to be very important uh, for the next 5 to 10 years.
Okay, got that. So that's the EMS play, viewers, that you could probably be looking at as well. Let me also bring up, some of the other buzzing spaces. Real estate, we were discussing this with Gaurav also. What's your sense on the real estate pack right now, slow mover until now? Any fresh moves or fresh triggers for re-rating to emerge again on real estate pack?
So I think real estate will, do well because we are probably in the mid cycle of the real estate uptick right now. I think the next big trigger will happen maybe 6 months or a year down the line, where uh, the next pay commission comes in. So that could be a
Yeah.
very big trigger. In the interim, I think lower rates, that when it gets passed through, uh, lower income taxes, those will sort of also help in real estate. But the challenge with real estate, especially in the larger metro areas, is the prices are significantly rich in prices of apartments, flats, buildings, etc. Right? So uh, if I look at it from a common man's perspective, most real estate is uh, you know today is being built for the rich, and so the affordable housing, etc., is not getting that much of traction, uh, probably because land in India is so expensive. So that is one area where I would hope that the government, both central and state, look at, because real estate is one area, if we can get it right, can create a very very long term sustained economic development for the country. Because
Okay.
just if I look at the parallel with China, I mean, China had a large part of their boom because they were steadfastly developing the real estate sector.
Okay, fair point. Towards the end of our conversation, Abhishek ji, highlight for us, for the rest of the year, any key triggers that you believe are going to be extremely important for retail investors to keep an eye out on, and that could really swing the way the markets go or probably create some opportunities for them to invest over the next 6 months.
See, I think few things we need to keep watch out for. Obviously, the top of the list is Donald Trump. The second is, I think, oil prices and inflation and how it pans out, and consequently, RBI rate actions. Uh, uh, we all hoping that we will see one more rate cut, maybe two more rate cuts during this year, because inflation has sort of really fallen a lot. Growth is also not picking up, so the RBI does have some space to cut rates, so that could give a fillip to the markets. And overall, I think we need to keep looking at the industries and the sectors where there is sustained growth. I think if we just keep things simple, look at where growth is coming and look at the overall macro picture, I think we should be fine.
Fair point. Okay, Abhishek ji, good to be speaking to you as always. Thank you so much for your time, and we'll hope to catch up very soon with you again to really see how some of these triggers that you marked out come into shape of the next couple of days as well. Thank you so much for being with us.
Thank you. Sure.
40 points higher on the Nifty, viewers, with the first 35 minutes of trade having panned out. We are holding above the 25,080, 25,090 odd mark at this point in time, inching higher from the low of the day as well. So let's see whether this goes on to build further into the gains. Today is the weekly options expiry as well, so keep an eye out on that. IT, FMCG, Pharma, the defensive space has actually slipped into the red today, along with even autos and consumer durables that were so far the front runners of the moves over the last three trading sessions. Some profit booking is taking shape there, so keep an eye out on that too. Real estate, on the other hand, has actually moved up pretty substantially, now up 1.5% higher. Let me also just highlight for you the key stocks there that are on the move at this point in time. We can actually see Anant Raj, that's up 3%, Prestige, Godrej Properties, Sobha, Lodha, even Oberoi Realty, DLF, all of them are on the move. Oil and gas has also moved up again. You can see infra and both the broader market names, sectorally, small caps and mid caps, there are also higher in trade. So we'll leave you at that, viewers. Let's hope that the markets build onto these gains, and we'll get all those market moves for you throughout the course of the session as well. And in case you have some questions about the stocks that you're holding on, many stocks coming onto your radar, how do you continue your investment journey now in the second half of the calendar year? Ask away all those questions on daily calls at 12 noon. I'll be back for that. Stay tuned.
Russia and all countries around this world actually respect the United States again. And the president is using the might of American strength to demand that respect.